Welcome back to our case study. Currently, in our database, we have 102 rows. In order to produce useful financial statements, we need to group such information into categories. Let's call this exercise mapping. A category needs to be assigned to each of the rows. For example, P&L categories could be net sales, other revenues, direct costs, personnel costs, other operating expenses, D&A, financial items, extraordinary items, taxes, etc. There isn't a rule as to which items have to be included in a P&L statement and which items should be grouped into more generic categories. The main goal is to provide as much information as possible while remaining concise. In other words, if we see that a given category is very significant for the firm's business, then we should consider including it as a separate line within our P&L. In general, each of the macro categories within a P&L is composed of smaller items. For example, personal costs may include salaries and wages, social security costs, bonuses and vacations, other personal benefits, etc. By grouping all of these smaller accounts into a macro category, we are able to provide a concise profit and loss statement. The mapping exercise is useful because it allows us to assign a category to all items which could be classified together. Using a single database for all 3 years here is crucial. It guarantees the coherent classification of each line item across the period under analysis, because the quantities for each account stand next to each other. Once we have mapped all the line items within our database, we can start building the actual P&L of the firm. In our data pack, the mapping exercise has already been performed. Please take some time to go through the various categories in order to gain a better understanding of the mapping exercise. Thanks for watching.